Hello and welcome back to my channel, where we decode the world of property, one expert at a time. Today, we're talking about something every homeowner thinks they understand until lightning strikes, pipes burst, or the roof decides to take flight. Homeowners insurance. I'm joined by Barry van Vuren, an expert insurance broker from FINANZ, to help us understand what you need, what it costs, and why it's not just a boring admin task, but a safety net you can't afford to ignore. So whether you're buying your first home, investing, or just trying to avoid nasty surprises, stick around. We're going to break it all down. How's it, Barry? Thank you so much for joining us today. Going to run through a couple of questions. So first of all, what exactly is home insurance and how does it differ from home contents insurance?
Oh, we are welcome here, and privileged to be on your chat about this topic. Look, it's quite easy to understand. Home insurance refers to the structure, the property's improvement on the land.
Okay.
That's your home insurance. That's what you see as physically the structure, the building. Where contents obviously speaks for itself. That's the movable personal belongings, the stuff that you have inside the house, which you will take away when you move. It's always good to distinguish between what's part of the property. That's fixtures, that's carpets, and if it's tailor-made like blinds or curtains, you can see that as part of the property's improvement.
Okay.
So always think of what will I take when I move.
Yeah.
That's contents. What will be left in it, that's part of property. That's the oven and the stove and all other fixtures, yes.
Okay, fabulous. So is homeowners or home buyers insurance a legal requirement when buying a property in South Africa?
No, there's no law that forces anybody to insure their risk. That's a preference.
Yeah.
Obviously for yourself to decide if you can carry the potential loss financially or if you want to mitigate it by taking out insurance. But it can become a requirement when you do bond financing.
Right.
So the bondholder eventually will require insurance to protect that property because that asset is there. Sure,
it's still their property, yeah.
Yeah, so then people may think, it's a compulsory thing, but it's made compulsory by the banks when you do your purchase through financing it with a bond.
Okay, so if you do a cash purchase on the thing, you don't necessarily have to, but
not necessarily. It's up to yourself to decide if you want to carry the risk yourself or to insure it, yes.
Okay. At what stage of the, sort of the property transfer should buyers consider taking out that insurance?
Look, you should understand that if you want to have insurance on your risk on the building, we're talking building now.
Yeah.
You should have it in place as soon as you take on the risk.
Okay, so as soon as transfer happens or registration happens.
Exactly.
Yeah.
So people don't always understand that they should look at their contract to when risk passes. And that's normally indicated in the contract, as you would know as an experienced property sales specialist, that in the contract you distinguish between occupation. There's a date for occupation, and sometimes it's what's comfortable for. And then when does ownership transfer? It's on registration, but also risks normally transfers automatically at the moment that ownership transfers. That's at registration. But some contracts can have a clause that says risk transfer on occupation.
Okay.
So people must be sure of that. When do they take risk? For if something happens to the property and they want it to be insured, they should have the insurance be synchronized onto that specific date.
Yes. Okay.
And I don't know if that's what you asked. When should they start? arranging that? Is that going to be
Yeah,
one of
well,
your
kind of-
questions?
Well, no, when to start arranging it to have it in place for when they need it. So, like you say, on registration or
Quite
on transfer.
important not to delay and frustrate when you do.
Don't think about it the night before registration happens.
Yeah,
know,
when
so-
you do financing, the bond registration attorneys have a requirement, and even the transfer conveyancing attorneys have a requirement from the bank, and that's where the bond registration attorneys is maybe two different attorneys.
Yeah.
Many times they have the requirement from the bank that they should see that their requirement of insurance being in place should be on file.
Right.
And they normally push for that long before they submit for registration. So people should prepare the moment they've signed a deal that's been accepted by the seller, that they start arranging to get that in place.
Yeah.
Because many a times we get this, we need confirmation now, we're ready to submit to the deeds office tomorrow. Where's the insurance? And then we start scrambling around, and it takes a couple of days to get proper optional, various options to consider to choose the right product. Yes.
Okay. What's the one thing first-time home buyers don't consider about home insurance?
Look, a couple of things that we see first-time home buyers not that experienced and need to be educated a bit about what it is about. And one of the things that we see is to determine insurable value.
Okay.
So they are many times confused with I've paid 5 million for this place or 3 million for this place. It should be insured for that. There's a big difference between purchase price, market value versus insurance value. I think we should maybe discuss that a bit more. But to stay with your question, what first-time home buyers, many a times inexperienced, and when they do tick the boxes together with the insurance sales process, or not the insurance, the property sales process and the bond application process, there's many a times these tick boxes, should we arrange insurance? And it's just like they're so eager to get their bond approved, it's like, yes, tick, yes, tick, yes.
Yeah.
And they end up having bank insurance issued without looking at the alternative options, and the most important thing, without being advised what this insurance covers and what it does not cover.
Okay,
and
so a bank might not cover as much as an individual like yourself would cover, or
Exactly, but the main thing, first home buyer don't have experience of house or home insurance, and I think they should be advised properly and you're going through what this product does cover and does not, and what's the requirements you should meet and disclosures you should give. And in the process, I found many times, or not many times, most of the times, if you tick those boxes, yes, I take bank insurance, it's just a case of the bank issues it automatically.
Right.
Nobody has taken you through the process of what this cover provides you with. So you stay kind of uneducated. I've got home insurance, but you're not sure what is actually covered and what not. You think it's just a standard thing. And there's a lot of options that can give you better cover or exposes you if you don't know what your requirements from your side should do, should not do, So
Absolutely.
that I think is the biggest thing. Where more experienced people will understand that they should look at a product and what it actually covers and does not.
So not necessarily tick straight away, but can still.
All covers are not the same.
Yeah.
All covers are not the same. No.
Okay. Excellent, interesting. I'm sure we'll cover that shortly. And this is, sort of the next kind of question is, how much cover do you need, and how do you work out that accurate value of what?
Good question. Look, the insurance policies, whether it's been the bank or your own alternative product, insurance companies in principle puts the responsibility on you as the insured or the owner to determine the amount that that you select and place on the policy.
Right.
Now, I'll discuss the difference between when you select your own product versus when the bank if you selected the tick box.
Yeah.
The bank, when they do valuation of the property for bond purposes, that's a certain value that they will indicate on their internal forms. If you buy for 3 million, you take a bond for 2 million, many a times they will say, okay, the property is good to cover the value that we are exposed to by lending you 2 million.
Okay.
For in the case if we have to sell this place one day, that's the one way of valuing the property, is for the purpose of security value, not for insurance value.
Yeah.
But then if the bank needs to do the insurance, if you tick that box, the valuer will always, in his report to the bank, put an insurance replacement value. They will apply that insurance replacement value as the requirement that they send through to the bond registration attorneys, and they will say that's the insurance amount, and if the bank issues it, they will issue it on that amount. Now, you bought the place for 3 million, and the valuer might be there, say the value is good for the bond of 2 million as a value purpose.
Yeah.
For security purposes, but for insurance we require 3.150 million. It should be insured for 3.150 million, and that's what they will then apply. If you want to insure it on your own, on an alternative insurer, not the bank's insurance themselves, they will require it to be at least the value that their valuer said it should be. So you don't really have a choice then, because they won't accept it if you approach them with alternative insurance. Now, asking the question of for how much should it be insured, very important. Nothing related to the market value or the purchase price. It's related to the improvements on the land. So you must look at, there's an empty stand, and then we've did improvements. That's from the perimeter wall, the gate,
from the ground up,
the paving, the house structure itself, the swimming pool, and whatever else there is. That's improvements.
Yeah.
So because the insurance company says, I'm taking risk on my policy wording, I cover you for your improvements, fixed improvements. Now he's taking risk on all of that. So if there's a huge flood and your paving, gets slashed away, you're going to want to claim for that. So that value must be included. People don't realize that. You're there, heavy storm, and your perimeter wall falls down, or a tree falls on it. You want it to be repaired for your insurance. So you're not insuring only your house, but the improvement. If you were the policy owner or the property owner, you should determine that value. Now, we normally have a discussion to give guidance. But kind of indemnifying ourselves and say, I'm not a valuer, but here's the guidelines, and you're welcome to either get a professional valuer or to ask around for building contractors to say, what will it cost me to reconstruct a property like this? And then normally based on square meters of the property and the finishing, is it mid high end, or very luxurious, or very architectural designs, and the inside being finished with marble and whatever. And then you'll get a feel that they'll tell you, okay, we look at building currently finished off to hand over, cost will be around about, let's say 25 or 20,000 or 20 whatever thousand rand per square meter. And it differs from town to town. You'll say, okay, but building cost. Now we're now talking around the Hermanus area. Properties are more expensive here maybe than in some other areas. But they'll say, but building bricks and building costs the same. But no, you look at a specific area. If there's a huge claim and it should be rebuilt or partially rebuilt or repaired or whatever, you'll have to get quotes from local builders.
Right.
And then you look at the local builders and say, listen, these guys, they've got a lot of work. They can pick and choose, and their prices are You know, it's supply and demand.
Absolutely.
Their prices are higher, and you're going to have to do the rebuilding and the repairs with that type of cost line.
Yeah.
So that's important then to look at your area, what it costs what would it cost to get that replaced. But we've got guidelines that we give clients that's been issued from many institutions for statistically this year the average building cost is this and this and this, and the inflation on building cost has been that according to the statistics. There's national databases, and then also regional, you can get some indication. Mouthful, eh?
Quite a big thing. Yeah,
Talking about the review, because
yeah.
part of your question is the review. You have to review it, like you've asked.
Yeah.
The insurance companies will annually, normally policies will have an annual renewal date, and they normally apply an inflation escalation or increase on the value of your property. Yeah. If you've insured it for 3 million, you will see on your renewal it will have increased by the suggested renewal schedule for the next year, with what we found is normally around about 8% increase. Now, 8% might be more than your building inflation is, and year on year,
more than likely not.
Yeah, but year on year, your policies increase may not be aligned to your actual building inflation, and one should from time to time reconsider that.
Right.
Did this ran out of, or am I lacking behind?
Yeah.
You know, so it's good to review it from time to time.
Okay, good. So at 3 o'clock in the morning, when Barry realized that he hadn't fully answered my question about replacement costs of a property, he sent me through this replacement cost calculation, which I'll quickly run through with you now. Say, for instance, your house is 200 square meters and your base building costs are 20,000 Rand per square meter. The estimated building costs will be 4 million Rand. However, what we don't take into account is that we are replacing an old house that was there, and we will probably need to demolish and remove the rubble from that property. This can cost up to 7% of that building cost, so we add 280,000. We also don't take into account that there are other professional fees like the architect, the engineer, and municipal plan approvals, 7% of that base building cost, another 280,000 Rand. And then add 2% for the site preparation and contingencies, so another 80,000 Rand. Durable value becomes 4.68 million Rand, and the recommended rounded insurance value on a 4 million Rand property should actually be 4.7 million Rand. So it's good to add about 17% above that building cost to a replacement cost for insurance. Barry, thank you, and I will add that. Good to know, absolutely. Well, I think we just did discuss the difference between the replacement value and the market value. And what are some of the most common claims that you see from South African homeowners?
Look, I think it's one of those things, like also in statistics, you get the low type of value damages occurring more often in frequency, and the high-end damages occurring less often.
Right.
But then again, low amount damage is not that painful as can be the big damage, you know. So yeah, the more common claims that we see is many a times accidental damages, and then storm damage is the other.
That's obviously one of my next questions. How does it differ, homeowners insurance, if you're living here by the sea in Hermanus, and what are some of the natural things that we have to deal with here, like the floods and the fires, and how does that affect the price of homeowners insurance?
Yeah, that differs a lot geographically. we've seen the floods over the past couple of years. So areas that's more, exposed to level of floods are obviously more exposed to that. But the policies cover basically the same thing. They don't ask you if you live up in the higher of Hermanus heights or whatever, do you want flood cover or not? There might be, like we've seen on the mountains, the scars are still there. If you close up to there, you can have a kind of a slide, a mudslide. But look, the insurance companies do ask the questions: are you in close proximity to the ocean or to rivers? And they look at that, and then they can maybe sometimes add exclusions, or they can increase their risk premium because they are more exposed to potential damage for that. And people should know that when they do their insurance, that they disclose those risks, because it's normally asked, and sometimes it goes past like, no. But if you're in close proximity, answer that question properly. Because if you get a huge flood overflowing the river banks or whatever, then you get damage like we've seen in Stanford, way more than what people thought. Absolutely. There was houses hundreds of meters away from the river that suffered from that overflow.
Completely underwater.
Yeah.
Are there any nice to have add-ons or to homeowners insurance?
It differs from products to products. We can go into that a bit, but you get the standard issue that gives you the cover for the normal, what we call normal perils. That's your fire. It's the first thing. It's the big thing. That's the one that doesn't occur often, but if it does, it's normally like big.
Yeah, devastating.
But then there's your wind, water, lightning, those additional, which is all normally included as the normal perils. But then there's optional additional cover that you can take out. It's like accidental damage that's not caused by any one of those perils. And then
if somebody drives off the main road into your wall.
Impact, we'll consider that impact. That impact is normally on the extended covers, normally added automatically on the policies, but we've seen some of them that don't have the comprehensive full cover, and impact is not one of the normal acts of God. The first basis of the insurance policies, perils are normally referred to as acts of God. Wind, warm, lightning, wind, water, lightning.
Strike you down.
Acts of God. But like impact from a truck driving through, we've seen it now driving.
It's just happened to me. Some guys who learn to drive, it just went straight into my wall.
You can't blame that on God. But it's normally, we call it extended cover. Normally the guys issues the policies with the extended cover to cover that. It's the same like a tree falling onto your house or what. That's impact, or even can be covered under accidental cover. But then other stuff that you can add that's not normally on the policy is fixtures and fittings, and accidental damage to fixtures and fittings, or all risk damage to fixtures and fittings, or theft of fixtures and fittings.
Okay, so maybe like you drop a cast iron pan on your glass.
So theft is also not an act of God, but it's something, like it's built into, I don't know by God or who, but it's something that happens naturally. But that's optional cover. So thinking of your swimming pool pump being stolen, or your taps from your walls outside being fixtures to the. And then people should know the requirements and restrictions on that. You get theft cover for fixtures and fittings, but with the requirement of forceful entry.
Right.
Now, if your solar panels are stolen off your roof, there was no forceful entry. So now you think you have cover for fixtures and fittings. But when you lodge a claim, they say, but where was the forceful entry? So, damn. But you could have extended your cover to have theft for fixtures and fittings without forceful entry. So that's an additional. And you'll pay a small amount extra. So all optionals will draw a little bit of extra premium.
That's worth it.
But you must be sure that do you have that? If you look at my neighbor here, there's solar panels on there. If it gets stolen, it won't be covered unless you specify, or unless it's included as fixtures and fittings. And if you want to cover it for theft, if it's extended to cover without forceful entry. So the same apply to your gate motors or your CCTV cameras or stuff. Yeah.
Sure, lots of little things to add on there.
Yeah.
I mean, this is how long is a piece of string kind of question, but roughly what, can buyers expect to pay for sort of decent coverage?
Yeah, difficult to say. It also, yeah. It varies. I think the biggest thing that determines right is the structural. I won't say design, but is it being standard structure, or is it thatch or wooden structures? Okay, that's one of the two things that makes a huge difference.
Yeah.
Thatch obviously is much more, exposed to the risk of fire, and that premium is normally more than double.
Oh, really? As much
than
as
what the normal, what we deem to be standard. Standard is normal brick walls or concrete walls with metal or tile roof. So that's a big difference. And then there may be a difference if it's properly exposed. There's some buildings with a combination of wood, a lot of wood. So wood is also making a difference. And then geographically, the insurance companies have huge statistical databases. They can look at what's their past experience of claims and exposure to risk in certain areas. Now you can look at.
So I suppose you mean like in the forests of Tokai or Neisner versus living out on the Platteland, what's your fire insurance?
Yes. But then also, there's little towns like we've seen that took quite a hit in Kleinmond and Pringle Bay and Betty's Bay. Other areas like we've got clients in St. Francis, there's a lot of those white houses with thatch. There's some companies that don't want to insure there. They can also choose who they want to insure. Sure. They can, when we do apply or request a quote, some of them can decline to quote to say we don't have appetite for that area.
Sure.
So geographically, is the bigger component.
So what I'm saying, what sets these different insurers apart? What makes them?
Why are they different?
Why use this company as opposed to that company?
Look, I think reputable companies is one to consider. Do I know this insurance company? Is it one that I'm feeling comfortable with? Product-wise,
Bob's house insurance wouldn't go down well.
You should look at going to a reputable company. Known for not looking for reasons to decline a claim, but rather how can they support you if it's a claimable event. It's a difference. You may think, but if it's a valid claim, they should pay. But some, look for a reason, and there's maybe something in the small print that says this is not what standard that you adhere to or whatever. So a reputable company. The policy wordings do differ. Some companies cover certain definitions in a different way than others. So for one example, some companies will say, and it maybe applies more to contents, but also to the structure, will define accidental damage as limited to only this and that, but excluding those and those occurrences or type of items, where others are more comprehensive. Okay. So then, if you look at what they cover, is important in the policy wordings, and that should be given to the client, pre-making his final decision with a quote. You should have access to the policy wording and be able to compare. The other thing
can also be quite daunting, because to understand all of that, I mean, I know when I sort of go through an offer to purchase with a client, I go through it point by point and explain to that client what this means. It sounds complicated, but this is the English version. This is the easy version of what that point means.
That's why making use of an advisor is important, because they can, break down all those complicated and jargon to plain and understandable terms. Some policies cover you for the listed perils, like fire, wind, storm, and so on. But if it's not mentioned within that list, it's not covered. Now, other policies will say we cover on an all-risk basis. Now, that's the two main components of type of cover that you normally look at in the insurance industry. Is it the listed peril, or is it all risk? If it's all risk, it's like you're covered for any damage, but they won't.
Especially those acts of God.
but on all risk policies, which is nice about that, they will say it's all risk basis policy, but clearly excluding this and that. And that's many a times easier to understand. So, okay, I'm covered for everything, but I can clearly read what I'm not covered for. So in that way, some of the policies differ, and the guys with the all risk policy many a times can say, okay, but I had a problem, I've got pipes that burst, it's not excluded, so I can claim for that. And the other guy with the normal perils policy said, but it's not an act of God, I'm not covered for that. So unless I've added it into the policy. So that's the other thing we can say is obviously requirements. Some insurance companies will have a lot more requirements, and that comes to commercial properties especially. Their risk reduction requirements, what they call it, to prevent the potential damage extending to a huge claim. They can put down a lot of requirements that you should adhere to, where others requires less, so that makes a difference. Some of the insurance requirements might be exhaustive, and you'll then rather look at a different option. But it's not that big issue on normal homeowners insurance. And obviously premium always counts, and premium should always look at what's the chance of excesses in the event of claim. Nowadays, we saw you said what are the most claims that get. Makes me think of research, ESCOM and and that in damage to the electrical components. It's more contents thing. But it also relates to buildings, because you get your gate motors, your garage door motors. Nowadays, with your alternative energy, your inverters, your batteries, your solar system, it's part of your fixtures. It's part of your building.
Right.
Now, that's nowadays the bigger claims. Like I said, more on contents, but on buildings as well. So the policies differ a lot there, because the guys know that power surge is big, and the one policy will cover you for power surge, but requirements, unless you have a property surge arrest device, SABS or SA National Standards approved, installed on your board with a COC by a professional installer, will not pay for power surge. And you only realize that the day you get a claim, if it's not been explained to you. So then the excesses which I referred to, especially on things like a power surge, the one company will have an excess of 2,500 Rand. The other one will have an excess of 5,000 Rand. So you won't be able to claim for your garage motor if that's due to power surge, because to replace it's not going to be 5,000 Rand, And then again, the requirements, if you didn't meet the surge protection clause, some of them will still cover you, but then the excess may be 10,000 Rand. It's like, so that differs a lot, those type of things. And that's things that occur more often than the house burning down.
Yeah, absolutely. And this is why you need somebody who knows what they're talking about.
Absolutely.
So what advice do you have for sellers? Should they keep their insurance in place until transfer occurs?
Absolutely.
Yeah.
Absolutely. Again, that we referred to earlier is your date of taking risk for the purchaser, and obviously that synchronizes with where risk ends.
So the buyer will then take on their own insurance, and that house should be covered from
exact date. I found examples where people said, but no problem. The seller said, you'll keep the insurance until
the end of the month,
whatever, and I'll arrange it then. He said we can stay on his insurance until the end of the month. Now, transfer takes place on the 2nd or the 3rd of the month. The end of the month is still quite a way, and something happens. He might get away with it if the previous owner submits a claim without telling the insurance company. But if the place burns down, for example, then they will go into debt and say who's the registered owner and whatever. If the registered owner is not the new owner and still the old owner, and risk has transferred contractually, then the old previous owner will not have insurable interest anymore. And that's part of the insurance clauses, that you should have insurable interest to insure something or to receive benefit for it. And they won't pay a claim in that case. So whenever they come with there's an informal arrangement, we'll keep it on our insurance, and
bad idea.
Bad idea. It can go south, and normally it goes south when there's big claims, because every detail is then checked.
Scrutinized. Okay. What's the one thing buyers can do today to better protect their homes?
Well, we're talking topic insurance-wise, obviously.
Yeah.
Well, look, I think they should pay a bit attention to maintenance. We talked about having a reputable company, compare the products and see at all the additional. So let's take it that your insurance is good and in place. What else can you do? I think look at protecting your own risk without always thinking as if I've got insurance. Look what you would have done if you didn't have insurance. Look at in advance at maintenance things, because many a times the lack of that and the lack of your reasonable care, which is also a clause in the policy, you should take reasonable care. You can't be completely, absurdly negligent and expect insurance to cover you if you don't look after things, So take reasonable care, clean out your gutters, that you don't get the water overflow into your ceilings in the case of a flood rain. Look at gradual deterioration, because that's also not covered in your policy. Now you start getting a leaking pipe, you don't attend to it, and eventually your ceiling collapse, and you get the insurance company that may realize that it was due to a long-term gradual thing, and they don't pay for that. The insurance company's norm is normally sudden and unforeseen. So try and look at things that is gradually, going, needs attention, that you try and prevent loss, because many a times that can disappoint you.
That's a very good point. Thank you. I mean, it's not something I thought of right now, but it makes 100% sense.
Yeah.
Well, Barry, your wealth of information has been absolutely incredible. I really appreciate taking your time out of your very, very busy day to chat to me, and much appreciated.
Always welcome. Yeah, it's a topic that can go on for hours.
Well,
but the last thing is I'll recommend people to speak to reputable advisors as well, and get as much knowledge on the table.
Yeah, well, I've sure learned a couple of things today, that's for sure. Yeah. Okay.
All right, you're most welcome.
Thank you so much.
Best of luck.
Cool, thank you. Massive thanks to Barry for joining me today and demystifying the world of home insurance in one of my most interesting interviews to date. I've left his contact details in the description below if you would like to get in touch. If you're in the process of buying, or even thinking about it, this kind of cover isn't just the checkbox, it's your financial parachute. As always, if you found this video helpful, give it a like, leave a comment with your questions, and hit that subscribe button so you don't miss future episodes. And remember, when it comes to smart property moves, Howard Shenker, Agent 7200, has all the intel. Thanks for watching.